Hello, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. Today is actually Thursday. It is the 17th of March. Actually, excuse me, it's a Thursday, 18th of March, not 17th of March. Let's talk about what's going on with the market. And yes, I hate to say I told you so, but I told you so. Look at this. This is pre-opening. We're down 235 after Fed said no interest rate hike and inflation is in check. Look at the Treasury. We fell off the cliff. We're down over a basis point. We're down 1.92 or 1.42%. We're at a swing low right now. And as I've mentioned, there's a huge correlation between the technology sector and the long bond right now because of yield, interest yield. Investors are afraid that if interest rates go up too much, it's going to impact on the tech sector. And it is. And if you look at the tech sector right now, we huffed and we puffed and we hit 2 days at the 50-day moving average. And I said we'll probably hit the 50-day line. And then, because here's the problem. If you look at the SPY, you will see, and this is what I was trying to tell folks the other day, SPY's going up, so was Nasdaq. But Nasdaq only hit the 50-day line while SPY hit new highs. So the SPY's going to cool off and hit the 50-day line. But where does that leave the Nasdaq, especially with interest rates going higher by bonds going lower? Remember, bonds and interest rates are inverse with each other, and that's the big key. And they're hitting tech stocks the most because tech stocks usually outperform value and financial stocks. So they have a higher yield, not interest yield, but earnings per share yield. But if interest rates are going higher and if earnings on if earnings on tech is going lower, that means there's a threat to how much they're going to yield in comparison to the bond market. It's just really that simple. The higher yield on bonds go up, the more fearful investors are that tech yield is going to go lower under earnings per share. It's really that simple. Now, yesterday we had FOMC, we had the Fair Chair press conference who said we're not going to raise rates till 2023, short-term rates. Meanwhile, long-term rates are going down. Going up, bonds are going down. So this is not pretty. This is not a great situation to be in. This is not a good environmental, this is not good for the economy. But Fed data, let's talk about Fed data. Industrial production was bad. Retail sales was bad. Today we've got jobless claims and the Fed manufacturing index. Now, here's what I'm going to tell you. The report comes out in about 17 minutes. And the problem is this. This is a report that's released weekly. And every week we see this report and the consensus now is 700,000. Now, this is not a lagging report. It's not like we wait back a month. This is from last Friday. So if unemployment rates continue going up, that means there's still a major issue. Over the last few weeks, they've been going down. It's been positive. And if jobless claims goes down, that means people are starting to get back to work, economy's reopening, and things will eventually get back to normal. But if we see this number head back towards the 4-week moving average, which is in the middle 700s or closer to 800,000, that's not going to bode well. That's going to give me a confirmation that the retail sales, industrial production, and jobless claims are in the toilet. And I don't want to see that right now. I'm not in the mood for disharmony this morning. I should label this video. I'm in no mood for this harmony. Anyhow, I'm hoping, fingers, toes crossed, that the number will be below 700,000 and the number will start moving continuously below 700,000. And that's where we're at right now. Now, with the Nasdaq 100, do not go long. Do not go bullish. Don't be a hero. I think we're going to cool off right now and probably test this level near the 299, 300 on the Nasdaq 100, and more than likely eventually hit the 200-day before we come up. That should coincide with earnings, and that should take us on the way up. Now, if you look at the 10 major sectors, let me point them out for you here. If you look at the 10 major sectors, you will see that energy, financial, industrial, material, consumer discretionary, retail is even ahead of technology. So tech right now is not doing that great. So we want to focus on industrial, energy, financial, basic materials. We don't want to focus on anything below these 3 or 4. And industrial and basic material are together most of the time. So I've got a couple of good pullbacks for you, and this will keep you away from the broader tech sector. So first is, Lyondell, can you pronounce this? LyondellBasell Industries, LYB. I like LYB. Now, this stock is a good one. Why? Right now, it's in the right place at the right time. Materials, organic chemicals, 160% over a year. Manufactures chemicals and derivatives. Operates as a refiner of heavy, high sulfur crude oil produced and engages in marketing and selling polyolefins, polypropylene, and polyethylene resins. I like it. The bottom line is it's making basic materials. You want to be in non-eventful stocks right now. You want to be in boring stocks right now. So it made a swing high, made a 3-day low, and now it's coming back up. Notice, didn't even touch the 50-day moving average. Didn't even come close to the 50-day moving average. That's a resilient stock. And another one is Unisys. Now, when I talk about Unisys, you're probably going to say, "Wait, Roger, this is a computer stock. This is a tech stock." Not so fast. It's a worldwide technology service solution, but they apply infrastructure. You see that infrastructure. Company builds more secure organizations by creating visibility in clients' business operations. But again, what do they deal with? They deal with solutions for infrastructure, system integration. And that's where the money is right now. That's where it's coming back to. And it's a Russell 2000 stock, and you guys know how I feel about small caps right now. So the bottom line is I like the stock a lot. It made a swing high. It cooled off for 2 days, 3 days, and now it's ready to come back. Notice didn't come near the 50-day moving average. This is not following the trajectory of the Nasdaq 100. This is the Nasdaq 100. Look at that. This is the 50-day line, breaks it, goes about halfway down into the twilight zone area, as I like to call it, and then comes back up, and then touches it and comes back down. Whereas these two stocks are literally sitting near all-time highs. I would put a buy stop on and enter on a buy stop right around the 109.50 level, exit around 104.25 level, and my profit would be taking my risk, multiplying it times 2, and adding it to my entry. And for Unisys, I would enter near the 27.50 on a stop. I would put a protection at 25.60 probably. Take the difference between my entry and my stop loss, add it to my entry, and that would be my profit target. Now, folks, before you go, I've got something big for you. Big! Now, thanks to a little-known market loophole, almost anyone can grab weekly trade opportunities. Some could even be worth thousands, hundreds and thousands of dollars. That's right. In fact, Wall Street legend Chuck Hughes, he's already received a 96.3% win rate from applying this strategy and this formula. That's right. He's been using this breakthrough formula to signal profits when the markets are up, down, and sideways. Imagine making money when you're wrong on market direction. Isn't that cool? Up, down, or sideways. And he's ready to reveal all the details just for you. Let's review. You don't need a large account for this. 96.3% win rate over 7 years. Works an up, down, sideways market. He's going to reveal all of it to you, just for you. Click on the link below to see Chuck's jaw-dropping profit generator in action right now. And I mean it. It is really jaw-dropping. You've got to check this out for yourself. Follow the link below. Learn all about it. 96.3% success rate, folks. And most importantly, make sure to like this video. Subscribe to this channel if you're watching on YouTube. Stay ahead of the market by being the first to be notified when we post new videos. And have a great day. Keep your eye on that job report. It's coming out in about 10 minutes. And I hope we're below 700. Bye, everyone.